Right, let's jump straight into this explainer. We're going to distill the absolute best secrets of the world's greatest investors and, more importantly, turn them into actionable wisdom for both the markets and, well, your everyday life. Have you ever actually wondered what makes a billionaire investor so ridiculously successful? I mean, is it just pure luck? Do they have an insanely high IQ? Or is there some secret algorithm the rest of us don't know about? Well, grab a notepad because we are going to break the whole thing down for you today.
So what's genuinely fascinating about this is that the answer isn't complex math. It's not insider knowledge either. When you look at the track records of the absolute best in the game, their edge almost always comes down to deep simplicity, ruthless emotional discipline, and a highly practical life philosophy. Seriously, they aren't predicting the future, they're just playing the odds way better than anyone else.
And we're pulling these profound lessons straight out of William Green's brilliant book, Richer, Wiser, Happier. Green literally spent 25 years interviewing the absolute elite of the investing world. And what he found is that these folks, titans like Mohnish Pabrai, Sir John Templeton, Howard Marks, Jean-Marie Avallard, Joel Greenblatt, Nick Sleep, Tom Gaynor, and Charlie Munger, they are essentially practical philosophers. They figured out exactly how to optimize their decision-making in a completely unpredictable world. So today, we're going to walk through a detailed, chapter-by-chapter summary to unpack specific lessons from each of these masters.
So our agenda for today covers 4 main areas. First, clone the masters. Second, mastering market moods. Third, surviving the unknown. And lastly, the true meaning of rich.
All right, kicking things off with Section 1, Clone the Masters.
Let's talk about Mohnish Pabrai. His flagship fund returned a staggering 1,200% between 2000 and 2018. That's a massive return. But his secret? Well, he openly, even proudly admits to being a shameless copycat. Pabrai is living proof that you literally do not need a single original thought to win big. You just have to observe who is already successful and shamelessly clone their entire approach. Actually, he modeled his whole strategy on Warren Buffett and Charlie Munger. He even went as far as getting a custom license plate that reads COLMB26 just to remind himself every single day of his ultimate goal, to compound his money at 26% a year. Now, pay close attention to what Pabrai doesn't do. He completely ignores IPOs. He totally avoids short selling, mainly because the potential downside is literally unlimited. And complex macroeconomics, he doesn't even look at it. Instead, he just waits. He waits with this extreme, almost monk-like patience for those rare, obvious bargains that sit perfectly within his circle of competence. It's really a game of subtraction. He's removing the noise.
And speaking of stripping things down, let's bring in Joel Greenblatt. This guy averaged an unbelievable 40% annual return over 2 decades, and Greenblatt's entire incredibly successful philosophy basically boils down to just 3 simple steps. He proves that successful investing really is just about figuring out what a business is actually worth and then paying a whole lot less for it. You don't need some overly complex, perfect strategy. You just need a sensible one that you can actually stick with, especially when the market starts getting really scary.
Moving right along to Section 2, Mastering Market Moods.
Take a look at this stark contrast. While the crowd is out there panicking, panic selling at the absolute bottom, and wildly chasing whatever fad is currently hot on the internet, the master reacts completely differently. A master waits. They behave counter-cyclically. They are stepping up to buy when everyone else is absolutely despondent. It's entirely about exploiting the irrationality of literally everyone else in the room.
And legendary investor Sir John Templeton knew this better than anyone. He recognized that to actually exploit that market irrationality, you need a rock-solid set of rules to keep your own emotions perfectly in check. His big secret? Looking exactly where no one else even wants to look. He purposely hunted for assets that had performed dismally over the previous 5 years, knowing that's where the true bargains were hiding. And fun fact, he was so disciplined with his money that he drove a cheap Kia later in life just to avoid any unnecessary spending.
To prove his method wasn't just talk, let's jump back to 1939, right on the brink of World War II, when the entire market was gripped by absolute terror. Templeton placed a massive, counter-cyclical bet. He bought stock in 104 different U.S. companies that were trading at just $1 or less. He completely ignored the crowd's terror. And guess what happened? Out of those 104 stocks, he turned a profit on 100 of them, ultimately walking away with 5 times his money. Unbelievable.
Building on that exact idea of navigating chaos, billionaire investor Howard Marks offers us a profoundly practical philosophy. He teaches that since we absolutely cannot control the environment and there's no way to predict the future, our best tool is humility. We have to continuously adapt to market cycles. You can't just force the market to hand over high returns. Instead, you have to observe exactly where we are in the current cycle, accept the impermanence of it all, and adapt your behavior accordingly.
Which brings us perfectly to Section 3, Surviving the Unknown.
And here we need to talk about the ultimate survivor, Jean-Marie Eveillard. His entire philosophy is built on this one bedrock concept, the margin of safety, a principle originally passed down by Ben Graham, the godfather of value investing. You absolutely have to build in a shock absorber. Why? Well, because life, and certainly the markets, will eventually hit a massive pothole. Your margin of safety is what protects you from an unknowable future, plain old bad luck, and honestly, your own miscalculations.
You know, long-term resilience is actually rarely about making those brilliant, high-flying bets. It's far more about the toxic, wildly popular fads that you actively manage to avoid. Eveillard brilliantly calls these triumphs of omission. By stubbornly sitting out the absolute craziest bubbles across 3 different decades, like avoiding Japanese stocks in the 80s or toxic financials before 2008, he preserved capital when everyone else was getting totally wiped out.
But we've got to be real here. Standing your ground like that is incredibly painful. During the massive dot-com bubble of the late 90s, Eveillard flat out refused to buy tech stocks because they simply had no margin of safety. Because of that, his fund lagged, and a staggering 70% of his shareholders abandoned him. They were furious. It requires a massive amount of emotional fortitude to stick to your guns while everyone around you seems to be getting rich overnight. But when that tech bubble inevitably burst, Eveillard was the one left standing.
And that leads us to our final section, the true meaning of rich.
Because the masters know better than anyone that money doesn't just magically shield you from life's curveballs. Case in point, Joel Greenblatt once made what looked like a virtually riskless bet on a tourist attraction. Sounds safe, right? Well, he woke up one morning to read that the main pavilion had literally collapsed into a massive sinkhole. You can't make this stuff up. The point is, true success requires building the mental toolkit to absorb and survive the inevitable pain and unpredictability that life will throw at you.
As Bob Marley famously put it, true abundance goes far, far beyond your bank account balance. It's really about building a life that is resilient, rational, and deeply fulfilled. Look, you can have billions of dollars in the bank, but if you're constantly a slave to your own emotions, or if you're just deeply unhappy, you aren't truly rich. True wealth is about living by what Warren Buffett calls your inner scorecard.
And this is exactly where folks like Charlie Munger, Nick Sleep, and Tom Gaynor really bring it all together. Munger emphasizes that simply avoiding catastrophic emotional errors like crazy anger or toxic self-pity is how you stack the odds in your favor. Nick Sleep proved the incredible power of intense, long-term focus by just entirely tuning out short-term market noise. And as Tom Gaynor points out, you don't even need to be perfect at this. You just need to commit to daily, sustainable habits. If you can subtract the bad habits, prioritize sleep and exercise, and keep a calm mind, you will drastically improve the compounding interest of your entire life.
So let's pull all of this together and summarize the main lessons from the book. The biggest takeaway from studying all these financial titans is that sustained, long-term excellence does not look like a frantic day trader screaming at 6 computer monitors. Not at all. It requires deep simplicity, unyielding discipline, and a constant, unwavering focus on your inner calm. You have to subtract the unnecessary, always demand a margin of safety, and ultimately play this game for your own true independence, not to stroke your ego.
The masters we've talked about today, from Pabrai to Templeton, right through to Munger, have laid out their exact blueprints for capturing both lasting wealth and true wisdom. The playbook is right here. But as we all know, knowing the path and actually walking it are 2 very different things. So now, the ball's entirely in your court. How are you going to apply these exact lessons to your own portfolio and, more importantly, your life? Thanks so much for joining me for this explainer, and I genuinely hope these insights help you build a richer, wiser, and much happier life.